Welcome. In this video, how many Zbcn do you need to become a millionaire? We will analyze this. Don't forget to subscribe, like, and please watch till the end to understand.
But first, let's analyze Zbcn.
The possibility of the price reaching the ascending trend line and reacting from this area is one of the most closely watched structures in technical analysis and significantly boosts investor confidence. An ascending trend indicates that buyers dominate the market, with prices forming higher lows on each pullback, creating an upward structure. The fact that the price is currently touching this trend line points to a critical level because trend lines are among the clearest reflections of market psychology. When the price tends to bounce off this trend line, it is not only a technical signal, but also a strong support zone formed by the collective consciousness of investors. Buyers tend to enter this area on each pullback, increasing the likelihood of the price initiating another upward move. In particular, upward movement during such trend touches serves as proof that the trend remains strong. The impact of reactions from the trend line on investor psychology is also significant. A trend is essentially a geometric reflection of the path prices have historically followed, and when clearly visible on a chart, it increases confidence. Many investors see a test of the trend line as an unmissable buying opportunity, leading to strong participation from buyers. A bounce from the trend line can trigger an even stronger upward movement as a result of this shared market perception. At this point, the upward momentum of the price is not just a matter of a technical line being held, but also a strong signal that buyers remain in control of the market. When the price touches the ascending trend line and bounces, it can also mark the starting point of major rallies. Reactions taken from the lower areas of the trend line often lead to the market's strongest upward movements. Here, the trend line acts like a springboard, pushing the price upward and opening the way for a strong jump. Especially if there are multiple touches on the trend line and the price is bounced upward each time, the likelihood of repeated movement increases. Seeing this consistency, investors gain more confidence that the trend works, which further contributes to a strong price bounce. Another important point is that these trend touches are closely monitored by major players. Institutional investors and high-volume buyers pay significant attention to whether trend lines are broken, because this determines their strategies. If the price touches the trend line and shows a bounce, large players may also participate. This increases volume and helps the price move upward more strongly. Therefore, not only small investors but also large capital holders relying on trend line reactions provide momentum for a potential upward rally. The reason why the potential bounce from the ascending trend line is so valuable is also due to its alignment with the market's natural cycles. Markets never move in a straight line. There are always waves and pullbacks. In an upward trend, these pullbacks often reach the trend line and then initiate another upward move. This is a sign of a healthy rise because the market takes a breather, consolidates, and then moves up with stronger steps. Thus, the current touch of the ascending trend line is part of this natural cycle and indicates that the trend has not been broken. In fact, the likelihood of the trend continuing is strengthened. In such cases, one of the commonly used phrases in technical analysis is, "Let the trend be your friend." Pullbacks to the trend line are generally the lowest risk points. When the price bounces from the trend line in an upward trend, investors trade from a safer level and also have a large potential gain. Therefore, touches on the trend line are often considered the most advantageous entry zones. A bounce from this level is a strong signal for both short-term and medium-term upward movements. At this stage, it is natural for investors to focus on how the price reacts to the trend line. The preservation of this line is not only an immediate movement, but also an important indicator that the overall bullish scenario will continue. A bounce from the price confirms that the trend remains intact and upward movement will continue. In the opposite scenario, if the trend line is broken, market psychology shifts, potentially activating sellers. However, for now, the price touching the trend line indicates that buyers still strongly control the market. Therefore, the likelihood of a bounce from the trend line is considered high. From another perspective, reactions from the trend line provide significant clues for forecasting future market movements. If the price bounces strongly from this trend line, it also signals that the market intends to make new highs above. As long as the ascending trend continues unbroken, the price is expected to reach higher highs each time. This creates a very positive outlook for long-term investors, as the trend remaining intact means the price direction is upward, and every pullback simply represents a new opportunity. In conclusion, the price currently touching the ascending trend line is a critical situation. If it bounces from this level, a strong upward movement can begin. Technically and psychologically, this area acts as a strong support zone. Investor confidence in such points contributes to the price gaining upward momentum. The preservation of the ascending trend shows that buyers control the market, and a bounce from this level makes a strong rally highly likely. Therefore, the current price situation is promising, and according to the principle, let the trend be your friend, the movement coming from this area is of great importance. However, we can't rely solely on trends to make decisions, so let's also examine other metrics. Stay tuned. The existence of such an ascending channel is one of the most closely watched and relied upon structures in technical analysis for predicting price movements. An ascending channel represents a market structure where the price moves between two parallel lines and buyers step in on each pullback. Within this structure, when the price approaches the lower line of the channel, it finds support and typically reacts upward. When it approaches the upper line, it meets resistance and short-term pullbacks may occur. Currently, the price testing the middle band indicates that it has reached a critical level in the center of the channel. Technically, the middle band serves as a reference point that reflects the short and medium-term trend of the price as it averages the upper and lower bands. If the price breaks this band, a strong signal is generated that upward movement will continue, initiating a journey toward the channel's upper band and the target price of $0.12. The middle band of the ascending channel is also a critical level in investor psychology. This area acts as a short-term equilibrium point in the market. If the price manages to stay above the middle band, it indicates that buyers are strong and the market can maintain upward pressure. If the price breaks the middle band downward, it may be perceived as a short-term consolidation or weakening signal. But if the overall trend remains intact, the probability of moving toward the upper band and the $0.12 target remains high. Therefore, maintaining the middle band is crucial for the price to continue its upward trend. Technically, a break of the middle band in an ascending channel also shapes investors' buy and sell decisions. Buyers may enter more aggressively at this point, accelerating the price toward the upper band. The upper band acts as both technical resistance and a target price. Investors may view it as a point for profit-taking or a new buying opportunity. Therefore, breaking the middle band serves as an important trigger that allows the price to gain momentum and reach the upper band. The target upper band of $0.12 following a break of the middle band is not just a technical number. It is a point where investor psychology and market dynamics converge. Movement toward the upper band strengthens buyer determination and momentum. In such channels, each rise reinforces investor confidence and initiates a positive cycle in the market. This cycle facilitates the price reaching the upper band more strongly, beginning the journey toward the target of $0.12. From another perspective, maintaining the middle band of the ascending channel indicates that both the short and long-term upward trend will continue. While the price moves balanced between the lower and upper boundaries of the channel, staying above the middle band shows that the momentum necessary for trend continuation is preserved. Therefore, breaking the middle band technically increases the likelihood of initiating an upward attack toward the target price of $0.12. Additionally, for investors, a break of the middle band is important for trading strategies. Positions taken at this level offer significant profit potential if the price reaches the channel's upper band and the $0.12 target. Therefore, preserving the middle band is critical not only technically, but also for risk and reward strategies. Whether the price bounces or breaks from this level directly affects investors' short-term and long-term plans. In an ascending channel structure, a break of the middle band also reveals the market's overall health and the dominance of buyers. The continuation of the trend, maintenance of investor confidence, and the price reaching the targeted $0.12 all rely on the importance of this level. Technically, bounces or breaks from the middle band are among the most critical factors determining the price's upward momentum. In conclusion, the price currently breaking the middle band of the ascending channel signals the start of a strong upward movement technically. The channel's upper band and target price of $0.12 should be monitored as key levels the price could reach. Maintaining this level and allowing the price to move upward from here are among the most critical factors for trend continuation. Therefore, whether the price breaks or bounces from the middle band is highly significant for both technical analysis and investor psychology, and the probability of the price moving toward the target of $0.12 is considered high.
Planning an investment strategy with the goal of becoming a millionaire, especially in the cryptocurrency market, is a process that must be approached both strategically and mathematically. In this context, we can use the example of Zbcn to make an assessment based on a target price. First, the target we set is $1 million, which represents the long-term value the investor wants to achieve. To calculate how many Zbcn tokens an investor needs to reach this goal, a mathematical approach must be followed. By dividing the targeted $1 million by the target price of Zbcn, the required token amount can be directly determined. For example, if our target price is set at $0.12, the calculation 1 million divided by 0.12 is performed, resulting in approximately 8,333,333 Zbcn tokens needed. This number represents the total token amount the investor must hold to reach the desired wealth, directly influencing the investment size and strategic planning. Next, this token amount must be evaluated based on the current market price. Assuming the current price is $0.005, the amount of capital required to acquire these tokens can be calculated. Mathematically, multiplying 8,333,333 tokens by $0.005 results in approximately $41,666 of capital. This represents the total initial capital the investor needs to allocate at current market prices to reach the targeted $0.12. This calculation is critical for the investor's risk management, capital allocation, and long-term strategy. Another important factor to consider is market conditions and the probability of the price reaching this target. Cryptocurrencies are highly volatile assets, so the time and likelihood of reaching the $0.12 target depend on various factors, including market demand, the exchanges where Zbcn is listed, liquidity, community support, and overall trends in the crypto market. Investors should consider these risks when performing such mathematical calculations. To detail the mathematical calculation further, after determining the number of tokens needed to reach $1 million, the investor can also calculate the capital required at the current price. For example, if you want to acquire 8,333,333 tokens at $0.005, the total cost of these tokens would be $41,666. This is extremely important for determining the investor's risk capital. By combining the targeted wealth with current market conditions, the investor can create both a strategic and practical plan. At this point, investors should also consider timing and proper analysis of price movements. Due to the volatility of cryptocurrencies, prices can change rapidly, and reaching the $0.12 target may involve different risks at different times. Therefore, an investor should not rely solely on mathematical calculations, but should also incorporate technical analysis, market trends, and fundamental analysis into their strategy. The minimum capital calculation required for 8,333,333 Zbcn tokens to reach $0.12 is a starting point, but success must be supported by the right moves at the right time. Additionally, while acquiring this number of tokens, the investor should plan for portfolio management and risk distribution. Aiming to become a millionaire through a single asset offers high return potential, but also carries high risk. Therefore, managing the initial capital of $41,666 properly requires psychological resilience, the ability to monitor market movements, and support from correct strategies. From a mathematical perspective, calculating based on the target price and current price allows the investor to concretely visualize the wealth goal. Dividing $1 million by $0.12 target price and then multiplying by the current price enables the investor to understand the actual capital needed. This way, the investor can clearly see both the required token quantity and the initial investment. The importance of these calculations for investors is not limited to producing numerical values. They also guide the investor in strategic planning, risk management, and achieving long-term goals based on market conditions. While the targeted $1 million is mathematically supported by 8,333,333 Zbcn tokens and $41,666 of capital at the current price, the investor's strategic plan is shaped by these numerical insights. Investors should also account for possible market scenarios when making these calculations. For example, the time it takes for the price to reach $0.12, market fluctuations, listing announcements, trends in the overall crypto market, and community support all directly impact the likelihood of reaching the target. Therefore, mathematical calculations should serve as a guide in strategic planning and be continuously updated according to market conditions. Furthermore, when forming an investment plan, investors should prioritize risk management. While $41,666 represents the minimum capital required to reach the target, factors such as market volatility and liquidity must be considered to determine how the capital is allocated, at which price levels to buy, and under which conditions to implement a selling strategy. This ensures the investor is prepared both mathematically and strategically. In conclusion, this Zbcn-based calculation for the goal of becoming a millionaire allows the investor to clearly see both the required token amount and the initial investment. With a $1 million target, a $0.12 target price, and a current price of $0.005, the mathematical analysis plays a critical role in forming the investor's strategy. These calculations are one of the fundamental tools that help the investor plan according to market conditions, manage risks, and achieve long-term goals. In this way, the investor can determine the necessary steps to reach the $1 million goal with a plan supported by both mathematical and technical analysis. Based on the $0.12 target price, 8,333,333 tokens and $41,666 of initial capital provide a concrete starting point. Using these figures, the investor can plan both short and long-term strategies and act flexibly according to market conditions. From a mathematical and strategic perspective, the investor's goal of becoming a millionaire is not limited to the number of tokens and initial capital. Market trends, technical indicators, news, listings, and community support also directly affect the achievement of this goal. Therefore, mathematical calculations serve as a guiding reference and provide a foundation for strategic planning on the path to the goal. In summary, for the $1 million target using Zbcn, 8,333,333 tokens are required at a $0.12 target price, and based on the current $0.005, the investor's initial capital is $41,666. This calculation allows the investor to clearly see both the capital requirement and the steps needed to reach the goal, and plays a critical role in strategic planning. With this method, the investor can measure goals with concrete data, manage risks, and create a strategic roadmap to become a millionaire over the long term.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.